Good evening and welcome to Business Live, which we're going to be having quite a different look today because we're just concentrating on our business review for 2020. We're taking a look at 2020 in retrospect, what really happened within that year and really how did this impact everybody. 2020 had issues like the performance of the Cedi, which is touted as one of the best performances in a couple of years, also in the whole of Africa. The Cedi is seen as one of the best performing currencies. By February, it was stated by Bloomberg as the best performing currency for the period amongst 140 currencies at the time. That was in February 2020. And then also the Securities Exchange Commission doled out some money to people who had spent or invested in various fund management companies. Also, that happened in 2020. And then the Agyapa deal was also spoken about, or issues connecting to that also occurred in 2020. I have in the studio my important guests, Dr. William Pepra, Head of Finance, Valley View University, Dr. Richmond Frimpong, he is Head, FLF Africa. Also, I have Kusi Apia Adomako, Country Director for CAT International, and then Courage Boti, he's an economist. Courage and Kusi Apia Adomako are going to be joining us via Zoom. We'll also be Zooming our regional correspondents to tell us from the regions exactly what happened last year. And then also we will be talking some celebrity business right here in the next 2 hours. We're currently on radio and on all our social media platforms, but we're currently on TV, but we'll be joining in on radio at 5:30. So don't flip the dial because it's going to be a very interesting discussion. We'll go straight away to the wrap of the Cedi's performance that's been put together by Joy Business's editor Nixon Yeboah. He'll be just giving us a wrap of 2020, how the Cedi performed. My name is Odilia Ntiamwa. Stick and stay.
Currency lost only 3.9% in value to the US dollar for the whole of last year, and that comes as a good omen because if you compare to previous years, this is one of the strongest performance, with the exception of 2017, whereby the Cedi lost only 4.9% in value to the US dollar. This is actually the best performance so far we've seen in recent years, and that goes to indicate that the Cedi is one of the strongest currencies as far as Sub-Saharan Africa is concerned. If you look at the Forex Bureau, clearly the Cedi even did better over there because it lost only 2.88% against the US dollar at that level. So clearly you could tell that policymakers have been doing well to push a lot of dollars into circulation, and in that regard I would say that the central bank has done significantly well with the forex forward auction that they conduct bi-monthly, and that has really helped to improve liquidity as far as dollar is concerned and also deepen the market. We've also benefited from COVID-19 because with COVID-19 we've experienced less import into the economy. There had not been much import as far as we are concerned. Therefore, a lot of foreign outflows, particularly dollar, has not gone out to make purchases. Diversified economy has also been some of the advantage Ghana has benefited as far as the Cedi is concerned. Clearly, you could tell that even though crude oil had seen some reduction in pricing on the world market, the government actually budgeted $63 in the 2020 budget, but we've experienced crude oil going down, and it's presently hovering around $50. But on the average, you can say that it is about $40. But because of COVID, gold prices have shot up because investors have shifted their assets to the gold market. We've also benefited from significant rise in cocoa pricing, so that has brought us a lot of foreign inflow. So if you look at the trade balance, we've experienced surplus, and the surplus had been consistent for the last 3 years, and that has aided the strength of the local currency. So on a whole, we will say that the policy from the central bank has significantly helped to stabilize the cedi. The nation has also done well in terms of diversifying its export. We are hoping that non-traditional export will also improve in terms of bringing in significant numbers as far as the exports are concerned. Going forward, we expect that the cedi will do well. This year, we might not see a lot of repatriation of the dollar because there wasn't much import as far as the Christmas festivity was concerned. Government is also expected to go back to the market to raise funds via the Eurobond. That is also expected to bring in foreign inflow. So that on a whole will keep the foreign exchange market stable, and we don't expect the cedi to depreciate much in the first quarter and even the first half of the year unless something untoward happens going forward.
Thank you very much, Nixon Iyeboah. He's editor with the Joy Business team. Now, I met these two gentlemen under very strange circumstances in 2020. Dr. Richmond Frimpong, FLF Africa, I met him on social media. He sent some documents to me. I thought he was a sharp guy and we should, get him onto the master class. We did, and we've never regretted. Welcome, Doctor.
Thank you.
And then my second meeting was with Dr. William Pepra, head of Finance, Valley View University, where he actually complained that we had not been using Valley View University lecturers in discussing issues relating to finance and business. And so I took up the challenge, and he's currently overwhelmed. Welcome, Doctor.
Thank you very much.
Okay, and then I've got Courage Boti currently on Zoom. Courage, you have been consistent, helping the Joy Business team, making sure that we get the best news in terms of analysis when it comes to investment and all that. Thank you for supporting the Joy Business team, and welcome to the discussion. I'm sure you remember Dr. Frimpong, who used to work with you, and so it will be a good discussion that we're going to be having. Who would want to take it first? Doctor, would you like to take it? I
don't mind at all.
Okay, go ahead. Cedi's performance, credit to prudent policies, or just by dint of COVID-19, we haven't done a lot of activity, and therefore, obviously, the cedi cannot perform any other way.
Yes, good evening to our viewers. I mean, listening to the narrative just before this discussion, I enjoyed how Joy put the construction of how the cedi has done well. But you see, the conversation about Forex is always a demand and supply matter.
That's right.
And so usually, particularly for us in Ghana, if you look at the trends, I can say that fundamentally, it has very little to do with what we did in terms of policy. It has almost everything to do with a certain reduction in the imports that drive the demand for the currency. And so when that happens, great, we have done some good, but COVID pushed us to the wall to a point where we didn't have any choice than to figure it out, so we don't put a lot of demand on the foreign exchange. And so, okay, it's good to say we did well in terms of the depreciation levels in percentage terms, but I think structurally nothing has changed. But for COVID, we would have gone back to the old narrative. And so I wouldn't say we should pat ourselves on the back too much. We should go to work again at the fundamentals. Other than that, any disruptions will still throw us off the hook.
Have we really been going to work at all when it comes to the cedi's performance and really working on stability?
I think some work has begun, but we always just scratch the surfaces of the work that must be done. the economy of Ghana has a lot to do when we talk about the structural fundamentals. And programs like the 1D1F, programs like the industrialization drives and things like that, through Exim Bank, through GEPA and the like, we're supposed to have changed the fundamental construction so that we can export more and not increase our imports. Then you look at how the rearing for food and jobs and planting for food and jobs and things like that we're also doing. Ultimately, they were supposed to cut down the edge of demand. And so that is some work we must commend in terms of government's posture in policy. But if we want to do anything significant, we probably have to be a little bit more aggressive. You notice how COVID impacted our economy to the point where almost everything we had built over the years and the improvements we have gathered in a matter of just 3 weeks came down crashing. Yeah. And so the only way out of any quagmire going into 2021 will be to hasten our steps at correcting the structural fundamentals and stature of our economy. If we don't do that, we probably not get anywhere.
And that will include continuously taking a look at our exports?
Greatly, diversifying our exports, changing the construct of our economy, and now speeding up this industrialization drive. We need to take a bit more faster steps in terms of that. And then, government should be a little bit more aggressive in terms of this industrialization agenda. We can even start with the agriculture and some of the industries we are putting together. And when we are able to do, I think we can do well. Look at the supply side. You notice that one of the critical things that helped us in terms of the stability of the currency even was the syndicated loans that came at the time they should come.
The Eurobond issue.
And so almost every time we have to go and engineer the supply side, bring in some inflows so that if there is any demand, we'll be able to anticipate. One thing the Bank of Ghana did anyway that was good was a new creation of the Forex, the new Forex policies that they introduced. And the futures and the things they did was quite good. But it's just to manage the demand and supply side of this Forex thing. Structurally, fundamentally, we have to be a little bit more aggressive.
Courage, Boti, if you can hear me, what would be your take on the Cedi's performance?
Okay, thank you. Can you hear me?
Yes, I can.
Okay, sure. Good evening and Happy New Year to all of us. My take on the Cedi, I would beg to disagree slightly with Dr. Richmond on a few of submissions. The point he's making about the structure of the economy having changing or not changing much, I think is valid because not much has changed. But the fact that the Cedi was stable this year and we're looking at 3.9% depreciation versus the dollar cannot be a coincidence. And in fact, the COVID situation actually speaks against the stability more than speaks for it. Why am I saying this? You look at the period where, in fact, for the records, and this data is verifiable, you look through the first quarter, in fact, up to somewhere 18th or so of March, thereabout, the Cedi had recorded, I think, 4.8% appreciation versus the USD. You can attribute that to the early Eurobond issuance, that the inflows came in, and of course, we just completed an IMF program. It appears that everything was back on track, and the government had pledged some commitment to fiscal consolidation or remaining discipline, sticking to the 5% fiscal rule for the year, and then everything was looking kind of rosy. So investors were kind of in bed with government, and you can expect that that will feed into some of these things. But COVID happened, and if you look at the capital account now, which actually shows the outflows out of our economy, it's in a huge deficit. It's in a huge deficit because investors are at the peak of COVID, and then given the uncertainties of growth and the shocks to all economies around, they prefer to move into the safer havens and to the US assets and then into the bigger markets where there might not be much volatility. And then that actually left that big hole in the capital account. And of course, if foreigners are moving out of Ghanaian assets, Ghanaian bonds, Ghanaian equities and all of that, they would repatriate in dollars and all of that. So the outflows actually should suggest some significant depreciation for the period. I think the things that have, and on the structural bit of the economy, I think there's been some progress, except it's not at the level we would all want. For instance, for the last 3 or so years, we've run a trade surplus, and that is not by chance. It's actually as a result of, you see, you compare Ghana to countries like Nigeria, you compare to Angola, you compare to other resource-dependent economies, and you realize that Ghana has relatively more diversified export base compared to Nigeria and all of that. Whereas Nigeria depends on oil for 90% of their foreign inflows, we are looking at much less for oil in Ghana, to the extent that whereas oil was battered and we were lacking or bleeding seriously from that side, we saw a jump in gold due to safe haven appeal of gold. And then we saw cocoa also make up for that. And then so we realized that overall, I think as at October, the data from the Bank of Ghana shows that we had a surplus of 1.7 billion on our trade account. And then that actually helped in narrowing the current account deficit to some 2.8% of GDP from wherever it was previously. And so you realize that these structural changes, gradual as they are and not as fast as we all wanted, is actually playing some significant role in the kind of performance we've seen. And it's the reason I think for the last 3 or so years or 4 years, the Cedi has retained some stable performance, consistently below the, I think it's just last year we had 12% or so depreciation, but the rest have been under 10%. And I think these structural changes, slow as they are gradually gaining traction. I am particularly pleased with something like the non-traditional export sector, where I think the highest so far has been 3 billion in export revenue from non-traditional export. You see this year, even under COVID, I think we are hearing from the Export Promotion Authority that we're getting something in the region of $2.8 billion from non-traditional export. And these are not largely controlled by the foreigners or the multinationals. So those monies reside here in Ghana. You just oppose that with the fact that from November last year, in fact, November 2019, the Bank of Ghana introduced what they call the forward FX option. And that is actually meant to provide some liquidity on a bi-weekly basis in the system against retail demand. That actually drives expectation and then anchors investors' view of the currency and where it's going, because the rate at which they declare at each option gives a guidance to the market. We've seen through Q1 that they scaled it up from the usual $25 million to somewhere in the region of $41 million. And that was supposed to take care of the seasonal demand pressures we normally see in Q1. Subsequently, it was reverted to the 25 million range, and that was what continued through to the end of the year. We realized that that regular option is not only serving as a guide to the market, but also providing timely liquidity, which is discouraging speculative demand. So I think some of these management issues, as well as the gradual and slow structural transformation we are seeing in the economy, is playing a role in why the Cedi is looking quite stable, and it has been stable for 2020 relative to other countries. You compare countries like South Africa, you compare countries like Nigeria, and in places like that, you see South Africa reached somewhere 18% before ultimately clawing back some of the losses to, I think, around 2.5% or so to close the year. You look at a country like Zambia. Zambia is a different case and cannot be compared to Ghana, but you see that they have recorded over 30% of depreciation against the dollar this year. And they are also a resource-dependent economy. They export copper more largely. So you realize that the dynamics, that something probably is going right on the fundamentals. It may not be at the level we all want it to be, but I think it's playing a big role in what we are seeing.
So, I mean, all of you agree to the fact that, yes, our resources not going through processing and the fact that anything that happens on the international market could affect this area. But I like what Courage has just said. Diversifying the exports can play to your advantage, even if you are a commodities-based country. You would like to react to that quickly, or you would want Doctor to take and then you will come back?
Just a little bit. So Courage and I are saying the same thing, that structurally we are not doing what we have to do at the pace we have to do it. And significantly, the correction that happened in this year that gave us an advantage on the forex side has to do with things that do not necessarily out to advantage on the structural economy. So he mentioned the Eurobond that happened in Q1.
Yeah.
And so, but for that, what would have happened? And so that is the point I'm making, that we should be deliberate about changing the things that will give us long-term benefits, and that will shield us from the shocks of any kind of external dilemmas that happen going forward. I think Doctor can probably.
Doctor.
Okay, so if you look at what has happened during the COVID period, industries have not performed well. From Ghana Statistical Service, as at June, the industry sector was a dip by 5.7%. Service sector was 2.7%. These sectors are the sectors that causes the demand for the foreign currency.
Yeah.
So the moment you see a drop in their activity, it will have an impact on the demand side of the dollar. Mostly what government normally do is that they use the international capital market to bring in the supplies. We were fortunate as a country. The bond money came in
Just before the COVID.
Just before the COVID. During the COVID, the World Bank also gave us $1 billion. So any country
and then syndicated loan
came in. So straight away you see that the supply side is available, but there's no demand. And this is what is playing now. That is why our currency is performing well. So when Dr. Raymond said that we have to be conscious and make sure that we have a structural change where we'll be constantly making sure that we export more. Once we're able to do that, the currency will be able to stay at the level we want it. But going to 2021, if things should come to normal and industry and service sector should pick up, the currency will depreciate again.
I'm so sure that the election petition will slow things down a bit, at least for first quarter. And so maybe some huge activity will start from quarter 2.
I don't anticipate same, because this is not the first time we are having an election petition. So even the international investors have seen that we have a history. We are able to overcome such stuff, and then our judiciary is well fit to do something better about it. The first one that happened in 2012, that was the first time, and they were not sure what was going to happen.
That's right.
But with the example of how we handled it, I think this will be a good example. Secondly, if you look at the new legislations that have been passed about how litigations like that or petitions like that are handled, you notice that this time shorter, swifter, and even before we begin, we know how long it's going to take.
Yeah.
Where scenarios by March, maybe end of quarter 1, we should be done.
Yeah.
And so I would be very surprised if the international market reacts negatively to this. Rather, it should boost how we do the things we do. And I hope the government will not be disrupted, because we know where we are going, we know how we are going to do it. Thankfully, for the first quarter, we have the budget that was passed. And so everything should be in queue what we should do. Again, the government is still the same person who even planned for the quarter 1, and they have the programs in place. My expectation is that they are not going to reinvent the wheel. The critical sectors, the most productive sectors of their policies that were driving and running, they should just hit the street running. It's not now that they are going to form any strange new government. They know the people they need to put in place. So if I were them, in order to block the gaps that the petition can bring, they should be seen to be ahead of the curve and be in motion with almost everything, and not very swiftly with putting government in motion, and even with appointing some of the critical ministry heads, so that the effects of maybe the not being too sure about how it's going to affect business, so that inflows and things like that will be affected, will be nipped in the bud. So I don't expect it to happen same, but you never know.
I hear Kusi Appiah-Domako is on Zoom as well. He's the country director for CAT International. Mr. Appiah-Domako, if you can hear me loud and clear, you want to make any inputs into the Cedi discussion, the performance of the Cedi?
I'll mute myself. I would like to say that the Cedi's performance for this year is not as a result of any fundamental touches on the economy, but rather an issue of demand and supply. If you could remember, during the COVID, we have to refer to domestic production of most items that ordinarily would have imported them from Asia. So that alone kind of gave the Cedi some form of reprieve from the normal pressures that would have come on the Cedi. And so we shouldn't be excited. I mean, if you go into the scriptures, it says that do not be excited that the devils or the demons obeyed you. Be excited that your name is written in the book of life. So 2021 would come with different challenges. We are very optimistic this year compared to next year. And so if we don't do what is required of us as a country, then the successes or the lack we had for 2020 cannot be mirrored for us in 2021. But I want to say that we've seen government trying to touch the economy from its fundamentals. We've seen planting for good and job. We've seen 1G, 1F. All these things are a step towards strengthening the economy and its foundation so that we will have enough to produce and enough to use here than always having to import everything from foreign countries. But we should be very careful. 2021 might be different from 2020 that we just exited.
All of you gentlemen, my next issue is that we reacted very quickly when the COVID occurred by coming up with some basic things in order to cushion ourselves from other countries like India, for example, that stopped the exports of certain vital drugs. We stopped importing, or we were not actually getting PPEs, so we quickly had to go on to produce our own PPEs. Can't we have the same attitude of scarcity, the fact that nobody would really support us and drive the industrialization agenda, as Dr. Frimpong stated earlier? If any of you would like to have a quick take, and then we can move to the next subject.
So yes, we reacted swiftly, but it is not something we did because it
was deliberate.
No, at all. We had no choice, because there was no way out, and therefore staring at our faces, and the whole economy was crashing in our faces. And so out of the no options syndrome, and then out of the fear of losing out to all the hard work that had been put in place, we needed to figure out something. And that pushed us into what we did. Leadership played a part to say, yes, let's buy the bullet instead of just waiting to see how things can pan out. But I am saying that that urgency that drove us into that kind of nature as an economy is less than the urgency of a crashing for our future as an economy if we don't do something today. Mm-hmm. So I'm praying that the same urgency we put when COVID was hitting us hard, and when we were hearing the news around the world, and we even saw the example of other economies that were doing same, like Rwanda and co. We should now, going forward, be a little bit more impatient with the decision to decide to say that let's fix our economy the same way we want it to be done. And I thought that was the essence of Ghana Beyond Aid. Yeah. So if we can move from just saying it and just speaking it in meetings and putting together teams and committees, and now make it like a political tool, the same way we put the urgency of cutting through the COVID during the political time when we needed to vote. If we can put that same urgency to this task and say we want to transform the economy in the next 4 years, it should be done. The last election should tell every politician to know that Ghana is moving to a point where it is possible to change a government after 4 years.
That's very true.
And we should be putting these demands at the forefront of our conversation. That if we cannot have a government who will be ready to get things turned around in 4 years, be ready to be changed.
Okay. Well, Doctor, you want to make a comment?
Yeah.
Okay, go ahead.
Okay. So you see, AGI has been always be pushing the agenda that government should buy made in Ghana products. So when COVID came, the first PPEs that were produced by the companies, people complained about the quality. We saw that the standard authorities came in immediately with standards.
Yeah, FDA also did.
Came, and the industry complied, and now we have the best. And even others, the designers also came out with some fashion and tried to make money out of that. COVID has made us to know that, yes, Ghanaians, we can do it. The only thing we want is that government should be conscious and say that I'll buy made in Ghana products. The moment government does that, the effect is that it reduces your government importation bills. And it reduces, that is the demand side also. The money will stay within the country. So government should work more with the industries that we have here in Ghana. And they gave some monies to them during COVID. They should have a plan and make sure that the money will not stop going to the industries. In China and India, that is what the government is doing. They know they are making losses, but the government is consciously giving them some tax or fund tax reductions or some money to run their operations. And by so doing, now they are producing the best that we are all chasing, that's the buy made in India. Yeah. We can also buy made in Ghana.
Gentlemen on Zoom, quick reactions in relation to how we responded to COVID and how that could benefit the Cedi if this is what we would want to replicate going forward.
Very well. I think our colleagues in the studio have said a lot of good stuff I agree with. I just want to add that we all know that necessity births creativity. And then at the peak of COVID, we're looking for solutions to our problems. And then the motivation wasn't entirely profit, but to salvage the situation. But under normal situations or normal scenarios, those decisions to produce this item or that item will be driven by the profit motives. And then what underpins also those decisions are the economies of scale and economies of scope considerations as to how you could produce those things efficiently at the least possible cost to guarantee profit. Particularly in a time where we are entering the implementation of AFTA, and then that would mean that a lot of free goods or cheaper goods are going to come in because of the removal of tariffs and trade barriers and all of that. It only means that for us to be serious about this industrialization agenda and produce some of the things we need to produce, it has to be nationally motivated. If you leave it to the private man, he will do what to sell. Some of the agendas need to be driven by government and with all the support. I know in this era, trade protectionism and all of that is not a conversation that is palatable to the trade proponents, but it is a way to go and it's something to consider if we must grow our industries to produce most of the things that we need locally. If you realize, companies like Casapreco have been reconfigured to produce things like sanitizers, but those are not their normal chains of production. And then once COVID is out of the way, they'll revert to normal. What that means is that someone needs to take up that space of providing some of those things. And then most of other companies were reconfigured to do these things. And then things will return optimally back to their normal. And then so if we are not deliberate about championing industries or championing certain aspects of our economy's productivity and then try to support it at the state level, we are unable to achieve the kind of industrialization we need to sustain the Cedi stable outlook. That's the point I'll try to make. It's a laudable idea. It's something wishful to do, but then will it make economic sense for the private businessman? It won't until there is a state support along the way. That is why we'll complain all we want about Nigeria. You remember what the Nigerian government did to Dangote, and they bring a lot of cement into Ghana and around Africa, but then they produce it with a lot of tax reliefs and a lot of incentives in Nigeria. That makes it cheaper and can compete in our market. We need to start thinking that way also. It may not be a popular thing,
Thank you very much, gentlemen. Mr. Apiadomako, I would like you to hold your gun in relation to the Cedi, because it's already 5:30 and we've just discussed the Cedi. We have such a tall order. And so we will just move straight away into the stimulus packages and what happened in relation to COVID lockdown in March when the COVID struck by the 12th. There were several things that were done. Job losses, we had about 115,000 businesses permanently or temporarily closed, according to some statistics coming from the Statistical Service. We had about 770,000 people have their salaries either halved or part of their salaries taken off. There were some quick reactions from government. I'll just go through a bit. So there was the cut bus, the 1 billion Cedi stimulus package that was given to MSMEs. There was also the primary reserves that were reduced from 10% to 8% in order to make liquidity available to the banks to on-lend. We also had we also put together the COVID National Trust. Then we also went ahead to give hot food and dry food worth $40 million to people as a quick reaction. And then we gave the buffer food stock some $40 million to also stock up. These were, to me, a few of the things that were done to make sure that the economy was stimulated. Mr. Adomako, was this stimulus enough? And was this done at the productive sectors to quickly engineer some growth when it comes to GDP?
Okay. So the first question is whether it was enough. I think Oliver would always ask for more. But looking at the size of our economy and how much government can give, I think what government did was far in excess of what the economy could provide us. For example, we saw 50% government absorbing 50% of electricity, and then water for almost 9 months, so went free for most Ghanaians. And I think this intervention by the state were needed to kind of support Ghanaians who have been affected by the pandemic. But the question is, if this support has gone to the productive sectors of the economy, well, that is something that we debated it in many occasions, that instead of paying electricity for consumers and water as well, you could have given the money to businesses so that businesses expand their capacity and produce more. But the other question that we can also ask at the other end is that if businesses produce all these things and the people that are supposed to buy do not have money to buy them, where would the business be able to make their profit or be able to turn around? And so I think for me and for most Ghanaians, what government did was, the best intervention that government could have done. And in the most developed countries, you see the UK, for example, the British government had enough money to be able to take care of these people during the crisis. But here, look at what we got. The cap was very small because, government could not give what it doesn't have. But then you can also see that businesses that receive those support have come out to say that it helped them to turn themselves around. That beyond COVID, we can see those businesses operating. So on a scale of 1 to 10, I think I'll give government 7 in terms of how government responded to the COVID support to businesses. And I always say that it is always good to support private sector than even support the people, because the cost of giving a welfare to Ghanaians would have been so expensive than the support government gave to businesses. So, for example, if government were to say that, look, I was going to give every Ghanaian who has lost his or her job 1,000 Ghana cedis a month for, let's say, the 8 months period, that money would have gone in excess of the amount that government gave to the private sectors to help them root to themselves so that they could go back to the assembly line. So support to private sectors is very, very key for every government in times of crisis. And even if government, even for 2021 budget, it will not be a bad idea for the finance minister to look for additional funds to give to Ghanaian private sector so that they can still be able to compete in this world where most businesses overseas have received government support or government-backed loans with lower interest, so that whenever they export to developing countries like Ghana, they can sell cheaper than Ghanaian manufacturers can do so. So I think the door is not closed. Ghanaian business are like Oliver Twist, they will always need more. And so government in 2021 budget, I'm told that the finance minister will go to the parliament somewhere February or March. It will not be a bad idea for government to consider additional support to the Ghanaian private sectors, those who have been impacted severely by the crisis.
Like the tourism sector. Mr. Dumako, thank you very much for your contribution. Gentlemen, hold on. We would like to take a quick break. If you just tuned in, we're discussing 2020 business. Exactly the performances from various sectors and how that has affected the economy, and going forward, what the consequences will be for us as a nation. My name is Odilia Intiamwa, and then I'm in the studio with Dr. William Pepra, who is the head of finance, Valley View University. I'm also in the studio with Dr. Richmond Frimpong, FLF Africa, and then Kusi Apia Dumako, country director, CAT International. He's on Zoom, and then Courage Buti is an economist. He's also on Zoom. Later, we'll be joined in by our regional correspondents who will also be telling us the regional perspective of what really made the top business stories. And then we will do some entertainment business. We're also live on radio. So if you cannot catch us on TV, you can just tune in your radio and listen. We'll take a quick break. We'll be right back. We're back and we're discussing stimulus packages that we're giving during the hit of COVID-19 in March, and whether they are enough, whether they were put at the productive sectors to make sure that we're stimulating growth, because we would have to get revenue to run. And if we don't have enough revenue, then it means that government will be going into monies that it doesn't have, and that will mean borrowing. And we will be coming also to the revenue and debt side pretty soon. Which of you in the studio would like to go at it first?
Let me say that the stimulus package was to do two critical things. One was to save livelihood, and two was to save our economy. Now, it was a great effort the government did. Particularly, you notice that just before the stimulus package was brought on board, the finance minister did a narrative about how the GDP growth rate was being shut down all the way from 6.8 to about 1.5, and then the subsequent projections to about 0.8 or 0.9, and then they moved it up a bit when they saw some improvements. Now, that tells me that on the economy side, as for the livelihood side, it was okay. We didn't have an option because we had built our economy to a point where individuals couldn't survive on their own disposable incomes if we went on a lockdown for, say, 21 days. That is a reflection of the economy of Ghana. And as bad and as sad as it looked, that is a real economy and its implications. But on the government side, in terms of stimulus package to save the GDP and the economy, my question on that was that it is called a stimulus package because it is meant to activate and serve as a catalyst to close a deficit or a gap.
Yeah.
So if you are moving from 6.8 to an anticipation of, say, even 1.5 or 2, then it means we have about 4 to close.
Which is huge.
Which is huge. So when we are bringing any stimulus package, my expectation is that we tie that stimulus package to specific sectors of the economy that will throw back in revenue terms this gap closure, so that we can save jobs, so that we can save incomes, and we can save businesses.
And that wasn't done?
I'm yet to see, because if it was done, then we should by now, let me use the example of the NBSSI. The NBSSI was concentrating on, say, the MSMEs. And thankfully, our economic structure is that MSMEs do more than 70% of
the business in the
economy, and they create the biggest part of jobs. Now, so if the NBSSI, now the Ghana Enterprise Agency, is given a certain amount of money, whether it's enough or not, it's supposed to look at the 20% of that sector that can generate 80% of the revenues that can support the GDP gap in terms of the fall. So even if we were giving it to 100,000 or 50,000 people, there should be some data that says that these 100,000 businesses are going to recoup the gap we have lost out of the COVID. So,
but Doctor, if employment was one of the key focus areas and the money was given to 100,000 people, at that material moment, it was not going to serve the excess 140,000 people that the NBSSI reached. It reached over 240,000 people.
Right.
What you're saying is we should have just concentrated the money on a small number and have a ripple effect?
Not necessarily. Whichever number they were given to, what is the end? Why are we giving them the money? Is it a dash? Is it to really stimulate the economy in the areas they operate? If it is not a dash and it will stimulate, by now we should be able to tell that we are giving these funds out so that we can close the GDP shortage or shortfalls by this margin. I didn't see that. We were only recounting on we have given 100,000, we have given 200,000, we have given 400,000. This is a regional distribution. This is a number of women, this is a number of men. To what end? The end is to close a gap in our GDP. Because what is GDP? It's simply a snapshot of the economic mind. So, monetary value.
So your expectation was that the NBSSI, apart from giving us the gender distribution, should have told us exactly which kinds of businesses it put this money into so that we can track the impact finally.
That and more. Actually, the government should have told us that the funds that are going into, say, the bank side, where we are reducing the primary balances and things so that people can get online credit, or the funds we are giving to the NBSSI or even Maslock or whatever. This is the connection in terms of the closure of the shortfalls. Now, by the time we have issued these funds, either to NBSSI or whoever, this is how far we have come in terms of the revenues we would have lost but for the stimulus package. I am saying that deliberate, intentional calculation of saying, I am here to see. And when that happens, then the stimulus package was a dash, particularly when it clashed with elections. And more so when it now became a politicking kind of tool, when another party was saying we'll give for free and the other one. So my point is that if we have not had that conversation, we should be calling for that and say that the stimulus package we gave, enough or otherwise, did it go to the productive sectors of the economy? If yes, what is the return in terms of revenue to close the GDP shortfalls? If we don't do that, it is going to show up in our debt to GDP. And when it shows up in our debt to GDP, our greatest challenge is not even debt to GDP. Our greatest challenge is revenue to GDP. And we are hovering around 16% instead of, say, 25% to GDP. And we are going beyond 70 to 69% of debt. So we are going through a rate cycle. And I believe that if we did not do it like that, then the stimulus package will not or did not stimulate the economy. It is rather taking us back to the old economic quagmire.
Okay. Doug mentioned that he wanted us to see a sector. I am from the education sector. So NBSSI, they were tasked to give some funds to private universities. As I speak, not all of us have received.
Got it, yeah.
Where I sit, I have not received. Every day I call the officers, but the money has not come. So which means that it's affecting us. Private universities, as you know, we are really supporting the nation. Students who are not able to go to government or public universities fall on us. And we are also, our aim is not to charge huge school fees. Currently, the only way to survive is on this. I know some private universities, they have to lay off workers. They ask some of them to stay home without even getting anything. So we don't know how they are surviving. And also on the private side, also in education, the primary private schools, they form an association. They also ask to submit some list and come for some funds. As we speak, they have not been paid.
Wow.
So it's a big issue. So as Doug is saying, we should ask the question, where is the money going? Is it just a mere rhetoric so that we will know that the money is there, or just to cool us and know that something is coming for us? It's an issue. Touching on that, on the stimulus package, another angle which I think we should commend the government is on tax relief and tax exemptions. And in period of distress, the government did very well. An area I think we'll talk about it is the CST tax reduction. If I even look at MTN's revenue for up to September, they made 4.47 billion. If government were going to charge them 9% for CST, government would have raised about 402 million Ghana cedis. Government said 5%. So what government did was that government has reduced the tax burden on that. Also, government gave some tax relief to health workers, the frontliners. Yeah. So all these things, government tried to let the institution go on very well. We know that we are expecting more from government so that the economy can turn around. But for me, as I said, you should look at the educational sector. We are about to reopen school. They have given us 11th. All universities must reopen. But for private universities, the question is,
can you reopen?
Can we reopen? Because we don't have the money from NBSSI. How are we going to pay our lecturers or our workers? We know that the students who are coming with a lot of excuses. We cannot say, come to school. They will not be able to pay 100% school fees because the issue is that their parents have not gone to work. So this is the time that we really need the government to come to the aid of private universities. For public universities, because their salaries are paid. During the COVID, they don't have any problem. But for private universities, it's going to be so yes, we will reopen 11th January, but the question is, can we have the money from the students to pay salaries to sustain our institutions? This is where we are pleading with government, and I say we because I'm managing the finance of Valley View University. This is the time that the government should come to our aid. I know that I think because of this election issues, they have mentioned that funds, they shouldn't move funds, but probably they can give some exemptions to private universities and some private sector institutions that really require money to be able to start their operations in January.
On a scale of 1 to 10, Kusi Adomako gave government 7. What would be your
7.5.
7.5. Okay.
I'll do 5.
You do 5. Yes. Oh man, if you were an examiner, that was going to really be difficult. Courage, Boti, can you add up quickly, and then we will move to my favorite subject for 2020, Agyapa Royalties deal. Can you unmute yourself?
I have actually. Okay. You should be able to hear me.
Yes.
Yeah. Yes. Okay, sure. Interesting point made there. Let me just put this into, let me just look at it from this angle. If we look at the interventions and the aspect of just what is given to NBSSI and probably the private universities, you may be looking at a very narrow scope. I think the interventions were both direct and indirect. I think Mr. Aduma could talk about taxes or exemptions or some reliefs gotten on the tax side as well. And then you realize that we have, first of all, a very big limitation in terms of the size of the fiscal purse to be able to support the economy at such a time. And then so it didn't have to be just the fiscal stimulus, but also relying on support from the monetary authority. I was reading an article on Bloomberg yesterday that suggested that the advanced markets, the advanced central banks have had to cough up to some $17 trillion of monetary support to the fiscal authorities to be able to try to navigate the COVID situation. And the impact of this can never be expected in the calendar year. In fact, in the advanced economies, they are looking for to the next decade to kind of recover their economies. And so if you look at it in terms of the 600 or so million given to NBSSI and whatever may have been given to private universities and the few others that may have gone to a few other sectors, and then looking at the impact to see we haven't seen the impact and so it's not optimal or otherwise, I'm not sure it will be a fair assessment. My view personally is this. You look at it this way. NBSSI, whatever money is going to them is actually a loan from the best of my understanding. And you ask yourself realistically, when did those monies even get to them? Because the whole process has to be, come and present your document, register, then they'll verify and all of that. Some people I know have had to go register their business and claim their tax identification number because they never had one. And so all of those were affected in when they could even access those monies and all of that. And then so from the time they would have accessed the monies to ever put it into use and then seeing it impact in the economy, it will take some time. You look at beyond even that one, there was a targeted support of, I think, 1 billion cedis to the pharmaceuticals. And there is also some guarantee scheme for private enterprises to tap into some loan facilities at the Bank of Ghana and then, of course, with the commercial banks to try to stimulate the economy. All of these investments would take a lot of time for it to even start generating some return. So you see the GDP numbers. Yes, we contracted in Q2, and we actually entered recession in Q3 with a 1.1% contraction in non-oil GDP, oil GDP for Q3. But then on the average, you look at it, you realize that from Q2 to Q3, the economy grew. And then the expectation is that in Q4, when the lockdown effect would have been wiped out and probably some of these stimulus packages will start trickling in, you should expect some minimal growth in Q4. In fact, the government 0.9% growth projection for the full year 2020 can only be if we grow by 3% in Q4. Will that be possible? I don't know, because looking at the numbers, the negative 1.1 and some 4.2 or so 3 contraction in Q2, it's like even though there may be some recovery in Q4, as to whether it may get to that 3% to get a positive growth or the 0.9% growth target the fiscal Ministry of Finance set for themselves is doubtful. But there is no doubting at this moment that we could end up in positive growth. And those could be some of the positive impact of the early response. Of course, someone said on the call, I don't know who, I've forgotten who, but government could have done more if they have more resources. And I think they even recognize that they could have done way more than they have done, but for the limitations. Bank of Ghana have had to sidestep its memorandum of understanding on zero deficit financing to trigger an emergency condition in their law to pump in some 10 billion into the system. The shortfalls that we've seen was not only on the revenue side, but we see shortfall in, say, revenue, but government has had also to keep its initial expenditure plan to help the economy recover. Me, personally, I was advocating for a cut in expenditure in line with the fall in revenue to keep the fiscals in check. But if they do that, I mean, the job losses will be more pronounced than we are seeing now. The hardship will be more pronounced. And so I think that within their scope of powers, they've done what they are able to do, given the resource limitations. And the impact of it will take not this calendar year to realize. It might take a few years to realize, because the investment decisions will not yield the fruit immediately. that would be my take on this aspect of.
So on a scale of 0 to 10, what would you give government in terms of performance in reaction to the COVID?
I don't know if the question has to do with the optimality of the use, because of course, per the submissions here, I agree that part of it had to target lives and then part target livelihoods.
Yes.
Yeah.
Right? And can't all be about sustaining jobs and leaving people.
Yeah.
So I think the split, either side, they could have done way much more than they did if the resources were there. So I think government bit beyond what even they could, because that is the reason we are seeing the debt numbers where they are, because they have had to find monies from elsewhere to try to support the economy to the level. So they did more than the resource base can actually accommodate. And so if I'm to give them mark, sincerely, I want to stay away from giving mark, but I think they did more than they could have afforded. And that is why the debt stock is where it is today.
Okay, thank you very much, Courage. We are going to go to my favorite subject for 2020, the Agyapa Royalties deal. We have some stories to play back, some reactions from the minority side, the majority side, and all that. So my producers will play that, and then we'll come back into the discussion.
Mr. Speaker, the minority side, we are patriots. We believe in Ghana. We believe in the right thing. We will not be part of an illegality today, tomorrow, the day before tomorrow, or forever. Mr. Speaker, indeed, we wash our hands clearly. Mr. Speaker, this agreement or transaction is repugnant to Article 106, clause 7, 8, 9, 10, and 11. Mr. Speaker, we will not be part of this agreement. Mr. Speaker, today is a very sad day indeed. I cannot believe that this government can bring such an agreement for us to approve. But let me send a word of caution, and let me state that today is the Friday, the 14th of August, 2020, in the year of our Lord, that a future NDC government will not honor this agreement. Mr. Speaker, I want to state on authority to the investors that if you invest in this illegality, you will be throwing your money away, because God willing, on the 7th of January, by the grace of the Almighty God, Mr. Speaker, and I mean by the 7th of January, by the grace of the Almighty Allah, we will be on the other side of this chamber. We will not be there. And when we are there, all those who are perpetrating this, you shall be held to accountable, you shall be held liable, and you will answer for your deeds. Mr. Speaker, in conclusion, I want to end with a quote. And this is my favorite quote. And let the world listen today. There is a quote that states, and I quote, that the world, Mr. Speaker, that the world, no, I want them to be quiet. The world suffers a lot, not because of the violence of the bad people, but because of the silence of the good people. We are the good people in this chamber. We will not be part of it today, we will not be part of it tomorrow, and we shall amend this come 2021. Thank you, Right Honorable Speaker. Thank you.
Mr. Speaker, what we've witnessed in the last few minutes is a very sad spectacle in the history of our republic. That while the sovereign government of the Republic of Ghana is seeking to raise resources that it will put to good use to improve the quality of lives of our people. We are witnessing, right before our very eyes, attempts to threaten international investors and well-minded people who would want to invest resources in what the Republic of Ghana is doing. Mr. Speaker, this is something we ought not to mince words about. It is a very unpatriotic act that we are witnessing in the chamber of this House today.
We take this opportunity to call on His Excellency Nana Addo Dankwa Akufo-Addo to, 1, acknowledge that though the Minerals Income Investment Fund and its special purpose vehicle may be legal without public input, it fundamentally goes against his pact with the Ghanaian people. His pact with the Ghanaian people, particularly the mining communities, to cede 20% of mineral royalties to develop the communities. 2, to suspend the implementation of the Mineral Income Investment Fund Act until all documents relating to the establishment of the special purpose vehicle and its beneficial owners have been disclosed. As concerned Ghanaians, we sought to access the transaction documents on the Mineral Income Investment Fund Act's Secretariat, only to discover that it has none. 3, establish a multi-stakeholder process to review all options to optimize the mineral royalties in order to secure risk-free revenue to the state. Gold royalty is the most certain revenues to the state. Even though commodity prices tend to be cyclical, gold has only oscillated within 20%, which makes it a more stable commodity than oil. And with oil losing demand growth to alternative fuels, gold is expected to continue to exhibit some stability as a source of revenue.
Well, so for the ordinary person who's been asking, so what is the Agyapa Royalties deal? It's just like going for a mortgage. You don't have the money today, but you want a house and you need it badly. You're tired of renting. And so if you get a house that somebody can give you money to pay in advance, then you will pay the person back in different chunks later. Now, in this situation, we were going to be listing our royalties on the London Stock Exchange. A special purpose vehicle called the Agyapa Royalties company was actually going to be set up in a safe haven in Jersey, in the UK, where this deal was going to be surrounding, and that was where the operations was going to be done. The main issue is about the disclosures. For example, the special prosecutor in his 67-page document to the president indicated on pages 10 up to 14 about how Imara, which is the transaction advisor, was slipped into the whole discussion later when it was actually not part of the companies that were bidding for the contract. And then also the role that Data Bank was playing as an issue of conflict of interest, and of course how much Imara was taking and how much was going to go to Data Bank was expected that it would be clearly stated in the whole agreement. And then also in August, how quickly Parliament, especially the majority side, was seeking that government would, Parliament will quickly pass an amendment to the MIIF, that's the Minerals Income and Investment Fund Act, so that the controls or the supervision when it comes to that particular special purpose vehicles operations were minimized, I'm sure, so that things could be fast-tracked. So that's basically what the Agyapa Royalties deal has been looking at. Yesterday was actually the last day that the London Stock Exchange was going to actually allow that Ghana would do the listing. It was withdrawn. We just need to take a second look at the whole deal and take a look at the disclosure issues and probably solve them and bring it back, or look for other opportunities. There are several countries in Latin America, in Asia, that have actually been securitizing their resources for revenue. And Mexico is actually one of the first countries to have done that in the 1987. Well, gentlemen, that was just a bit of history about what the royalties deal is expected. I had a discussion with you yesterday, Dr. Frimpong, and I asked you that, is it abnormal that a company that is not part of the bidding process is reintroduced later after the issue?
Well, let me start from this way. So basically, Agyapa's conversation is simply a securitization point.
Yeah.
And you see, every time we come to the economy of Ghana, it's always about our revenues and our expenses. And we keep saying that our fiscal space is tight. We don't have much fiscal space. That is simply to say we spend more than we earn. And so if you look at almost every budget, particularly, let me use the example of the 2020 budget. We are always fighting about how much deficit we should accommodate. That is why the Fiscal Responsibility Act was passed. Yeah. And we've put ceilings on even the way we spend.
Exactly.
Now, even for COVID, in the period of COVID, we had to step that aside so that we can still spend. Now, if you even go deeper into our expense patterns, one of the critical expenditures we must do to turn around the economies usually is supposed to be the capital expenditure. Yeah. Now, that has been, if not the lowest, that has been one of the smallest item lines almost all the time. Always. If you look at 2020, for example, you will see that capital expenditure is about 1.9 or less
to GDP.
To GDP. And you will see that items like compensation to employees, goods and services, interest payments, these three alone, it's almost like 5-7 times our capital expense. So the securitization effort is to create some fiscal space, to bring in some more money, so that we'll be able to put into the capital expenditure side of our budget construct. And so the Agyapa deal, from the conversations and the documents we have read, meant to do that so that we can make some funds available in advance, and then we can use our income, the minerals and income fund, investment fund, to make a way out of raising those funds. The idea is not novel. It's not like it is new.
It's not a new thing.
Ghana has done it in so many times. The only difference maybe for this probably is the engagement and the disclosures and the conversations around it and the parties being brought to book as to what exactly it meant. Because at some point when you listen to the conversations, you notice many people didn't understand it. Yeah. And so because that understanding wasn't there, we were ahead of ourselves, even in terms of what it's supposed to do. There are critical questions also about the revenue we are making and securitizing for. Is it good enough to securitize for the duration we are doing?
Yeah, because just last in 2019, the revenue we got from gold alone was more than 2 billion Ghana cedis. Now, if we're securitizing our revenues and we're looking at 500 million, that's a little close to that for the year. Right. So it doesn't really make sense to securitize that, especially when you can make that within a year. On your own.
Yes. So that is another argument that was raised, and I think it's a fair argument. We have to come together, so both the government, the civil society, then the securities industry, and even the public, we should all be brought to book as to why it is this or it is that. The next point also was even about the parties. You asked that, is it okay or is it regular practice that sometimes you get into an agreement and the advices and the things that are cited in the agreement detail, as you move on in execution, you find some who were not originally mentioned.
On it being brought.
It happens. Just that it must always show up somewhere. Yeah. It must always show up somewhere. Because I can get a lead arranger who would sign to an agreement. And then when we get into the execution of whatever fundraising in corporate finance terms, he may have to probably outsource to another party, local or otherwise. But it must always be said. It must always be disclosed as a disclosure. And so I think that in terms of the idea, it is not new. It is great, but there needs to be a lot of disclosure, there needs to be a lot of conversation. Then in terms of the construct, there are a number of things that needs to be looked at again. Thankfully, the president has accepted that. And by now, we should have been on the London Stock Exchange for the IPO.
Yeah.
That has been halted.
Yeah.
My prayer is that I suspect all these things were not done to a certain extent because Agyapa met the political partying, voting, elections period.
COVID.
And so
we need that money badly.
Yes.
And it had to go.
It had to go. And at a point also, you notice that it was becoming almost a political conversation. And anytime we are at the height of political conversation for political rewards and benefits, we lose sight of the crust of whatever we need to do. Now we are out of that wood. Can we now open up and begin to have a good conversation?
Have some stakeholder engagement.
Yes, a little bit more, and bring everybody to speed so that we cannot agree whether to do or not to do.
Is it still worth it, having broken down how the revenues come in every year and how we're going to securitize this? 49% of the royalties ahead of time will always go to the investors who purchase the stocks on the London Stock Exchange.
It is up for us to discuss, and I'm happy about how the next parliament is looking. I'm very happy about it. It will force the government and the opposition to sit and have a good conversation. And we the people on the fence, the CSOs and the academics and things like that, the business class, should be interested. We should be interested in the Agyapa deal. We should be interested in the special prosecutor's report. We should be interested on the position of the finance ministry. And we should have frank and candid conversations about it so that we take a decision going forward.
Courage, Boti, together with Kusi Appiah-Domako, the finance minister made a simple statement on the 29th of August on the finance ministry's website in an article that said that if mining companies who haven't started mining could take a loan to put into a mine, why not government? What's your take on the Agyapa Royalties deal? The biggest issue has been disclosure and also the fact that, is it really worth it? I will go to you, Appiah-Domako, first, and then I'll come to you, Courage.
Okay, Cordelia, I think Agyapa, as the earlier speaker said, is not novel. It's also not a bad idea in its entirety. However, there are some issues that Ghanaians need to be very clear about. As an economist, before I go out and trade our expected revenue from the mineral sector for $500 million, I'll need to do what we call cost-benefit analysis and see that annually we average about $2 billion in terms of what we earn from the mineral royalties. And if we are going to mortgage 500 million of this, a quarter of this, and tie ourselves to some entities, I think it is not in the best interest for our country. If we were even going for, let's say, $10 billion, we know that $10 billion would have helped to resolve most of our development challenges that we have as a country. But this paltry $500 million, I think is such a small amount of money that we shouldn't have, package this deal on. But even on the start, I think government could have looked at all the various options available for the country before going ahead. And if this agreement would have been subjected to a series of debate and series of evidence, I think that perhaps a more optimal portfolio would have been considered than this Agyapa deal. Before you do something like this, you need to have various scenarios and various options. I don't know what other options that was considered by the government before making or selecting the Agyapa as the final one to go. And I know that we have good mathematicians, we have good finance experts in this country who could have advised government on how to proceed with regard to our expected mineral revenues than going for the Agyapa deal. Yesterday was the last day for Ghana to have listed on the London Stock Exchange. And now that that window was closed, I think we may need to go back again. And the way things have turned out, I'm not sure government will be eager to go ahead, even the way that Parliament has also turned out to be. Government will not have the numbers to be able to ram this agreement through Parliament. And so we need to look at other options. Indeed, we need money to balance our budget. We need money to do our development projects. But I think that we should not do anything that in future historians will not write good things about it. Because whatever thing that we do, we must do it in such a way that in 100 years from now, whoever will be alive in this country will say that, look, government of that time made a decision that became very, very a watershed decision for this country. And so we must look at it from that perspective, a value for money and also best practice. And if the best practice and the best evidence does not suggest that Agyapa is good, I don't think that regardless of whatever interest that people may have, we shouldn't have to run it through Parliament and get it, because it is the people's revenue, and that we shouldn't do anything that will not help the country going forward.
So since you started doing the ratings for us by scoring the previous conversation at 7, where would you want to score this Agyapa deal as a novel thing that government wanted to do to save revenue shortfalls?
I wouldn't want to be judgmental in terms of quantitative as to whether but I mean, if you were to ask me, I think that let us go back to the drawing board, let us bring minds together and see whether something better can come out beyond this Agyapa. Maybe there may be something that can unseat Agyapa from the throne. That will be a win-win for everybody, that future, the next generation of Ghanaians will be glad about.
Dr. Pepra, you wanted to make some interventions as well.
Okay, so I teach finance, so there's an issue of where the government is looking at where you can want to raise money. Government has a receivable, and first option is trying to go to the capital market to raise money. The other option is looking at factoring. Now we know that a Agyapa deal has become an issue. Government cannot move forward, go to the capital market to raise money. But government can apply the option of factoring, asking some investors to buy or give us money in advance, and then we, based on a discounted factor, reduce what we are receiving. And this for a short term. Mostly, if I look at the Agyapa deal, what the government stated was that he needed money badly, then to take care of educational infrastructure, also the health sector,
that's right,
and other developmental issues. And government said he needed money badly. So if you need money badly...
So it was education, primary capital expenditure, health and infrastructure.
If you need money badly, and in the shortest possible time, why do you entangle yourself with a Agyapa deal? Whilst you know that factoring is there for you, because the royalties is a secured revenue that if you want to go apply the factoring, you get international or even local banks giving you the money and waiting for a short period to do that.
But doctor, is that not also going to crowd out the private sector, which needs the revenue to grow?
You see, okay, let me put myself first in the issues of the financial sector, the banks in Ghana. When the government of Ghana asked all of them to bring in capital, the 400 million, what did they do? They brought the money and bought treasury bills.
Yeah, they have been doing that already.
So you need money, and now majority of the banking sector is owned by foreigners. They will bring the money outside for you to do whatever you want to do when you apply the concept of factoring. And factoring will reduce the issue that we are having with Agyapa going through stock exchange. I believe in capital market, but if government wanted it in the shortest possible time, the option for government then should have been factoring.
Going beyond, I mean, today as we stand,
government still needs the money anyway. Agyapa deal, it didn't go through. So the option is government should look at factoring. Government can be talking to the international community. Still, I am expecting these royalties, maybe 200 million or something this year. Can you give me in advance and I'll give me 180 and you take the 20 as your profit out, something like that. And also the issue with Agyapa was the timing. It was too short a time for the parliamentarians to go through the document. So that is where the people started raising, why are you rushing it? Because this is something that's going to keep us for a very long time. So sometimes when government is trying to do a deal that will commit us for a very long time, we need also enough time to go through the process to work on the document.
If you just tuned in, you're on radio and on TV. We're having a discussion on 2020, how the business community contributed to the economy by the various activities that occurred during the time. And I've been engaging the 4 gentlemen, and it's just me being the lady in here. Courage Boti, who is an economist, Kusi Appiah-Domako, Country Director, CAT International, Dr. Richmond Frimpong, FLF Africa, who's in the studio with me in jacket, and then William Pepper, Head of Finance, Valley View University, Doctor, who's also right here in the local cloth. What we are currently discussing is the Agyapa Royalties deal. What these 4 gentlemen make of it. The final person to have his take will be Courage Boti. Courage.
Thank you. So let me make some disclosures. I work with DataBank, and DataBank has been very much
involved. Yes.
And this whole conversation. Yeah.
So are you saying that your contribution may not be as objective as we're expecting?
Not that. I mean, everything I'm saying is my intellectual opinion. I'm just trying to say that I'll be measured in some of the things I would say. So, of course, for obvious reasons, we know our kind of countries. But that said, Dr. Frimpong made some very important points, which I guess worth re-emphasizing. He elaborated how constrained the fiscal space is, and then, of course, resource envelopes as well, and the need for diversity. And look at it from this angle. The people at the finance ministry, the finance minister himself, and then one of his deputies, and I think people around him are all people with capital market orientation. And so they very much understand ways of securitization and raising money from some of these innovative ways that are not necessarily novel, but are new to our market here. I think the issues of Agyapa bordered more on procedural issues, like you said, disclosures, and then probably a bit of sensationalism, probably for the season in which we are in, of course, the political season. Because otherwise, if we understood the processes and the things they were trying to do, maybe some of the commentary I say will be misplaced. Because first of all, what I'm saying is this. Government wasn't going to, of course, all we knew all this while is that raise taxes or get money from tax and non-tax revenues, then go borrow on the market to finance our budget and every other thing we did. Government wasn't with the Agyapa going to borrow. They were actually going to list an equity. And I guess that your panelists, the colleagues in the studio, understand what the difference between debt and equity.
Yeah.
So here, interest cost, we are saying you add 3 items: interest, compensation of employees, and then transfer to statutory agencies and cost of goods and services are consuming close to 100% of the domestic tax revenues raised. And then so you are looking for alternatives to expand, but then without adding to that interest cost. So they were going to list an equity. Now, of course, I heard arguments about 2 billion or so coming in gold royalties every year. Government wasn't going to list all 2 billion. In fact, all 2 billion is not for government. There are splits in that revenue. Some go to the traditional areas in which they originate, the kings, the chiefs in those areas, and some targeted at different institutions. And then so the total amount available to government really is not the 2 billion, but it's something significantly less. Now, what are they trying to do? They are trying to list as equity 500 million of whatever is accruing to them. And they would have done a valuation of this over time, what you call your present net present value analysis of whatever the valuation is over time and determine whatever the size of the thing is. And then you are listing some 500 billion, which is supposed to represent 49% of that entity, so that you can raise that 500 million as people's contribution to your company, which is Agyapa Royalties, and you can use that money to do your development. Now, when you receive your gold royalties, it becomes like what you call profit in your normal business. And then you split it in the ratios of, say, 51-49. And then each shareholder, based on their contribution, will get 1%. Now, the company had to declare dividend first before you even go ahead and share. But you see, that is even not the point. The main point is this, and that is what you read as a statement for the Ministry of Finance. The Minister of Finance is saying that companies can go borrow to invest in mines. I mean, we have traditionally, Ghana has only gotten what they call royalties from mining, because we do not participate in mining. And it's a heavy capital-intensive project, right? Now, with the institution of the Mineral Incomes Investment Fund, and then, of course, the royalties going into that fund and being managed, and then equity holders also contributing to it, we could build capital over time that we can invest into some of the gold mines, even in Ghana and outside. And that would increase our earnings, not only in royalties, but participation interest also. And then over time, we'll become a bigger institution that could ultimately come and own a mine of its own in Ghana and even beyond. That was the broader goal. If these things are explained, I think people would follow. And then the procedural issues can be looked at. Of course, if reading excerpts of the Special Prosecutor's report has to talk about how transaction advisors were appointed and then PPA processes and all of that. I am not a lawyer. I have no dealings in Parliament. I don't know what documents are available to the Special Prosecutor to come into the conclusions he came to. But my understanding of the capital market operations, how transaction advisors are appointed, and then the auxiliary services like the legal advisors and all of those things are appointed. Well, I need convincing as to what are on the document he is seeing the processes breached, leading to the conclusions that came across. But ultimately, those are procedural issues, I think, when looked at properly, can be corrected if something is wrong, and bring probably a good intention to reality where maybe we can all go ahead and then realize the benefit of our heritage. it is a sensational issue because it's a heritage. A lot of people identify with it, and then so it will become a topical issue. And so that is why it needed to be explained. This deal didn't come into existence in 2020. In fact, it's been in the budget since 2018, and the processes to bring it to market has been underway since that time.
Yeah, actually,
right?
Since
so
2017.
I believe that the conversation around it hasn't helped. Some of it lacked understanding, some of it lacked appreciation of the issues, and then some of it also lacked clarity. And I think the finance ministry themselves in an attempt to explain the issues are confounding it. And the reason we find ourselves in the quagmire we find ourselves in. So that's what I will say about it, like as a personal opinion, really, and nothing from official sources.
Okay. Now, yesterday I had a conversation where someone indicated that if we had formed a consortium, as in the local company that was participating, couldn't that have been better than picking Data Bank as the local input, which compromises the finance minister's involvement, which has actually led some of the conversations that have gone on from the CSOs, from the special prosecutor, as in bid rigging, conflict of interest, and all that. Couldn't we have formed a consortium from different companies? I know Standard Chartered was part of the companies that was involved. I know that there were several other organizations, including, I think, Stanbic or Standard Chartered, one of them, but a tall list. So if we had formed a consortium, would that have changed anything? Courage?
I wouldn't want to answer that question, of course, for obvious reasons. Not that I don't have an opinion, but I wouldn't want to answer that question, except to say that Data Bank is 30 years in the investment banking space. Data Bank has done deals with different governments. In fact, Data Bank has been on a few Eurobond transactions and even for other state agencies in Ghana. If you are talking about a capital market investment bank in Ghana that has the competency to do some of these things, I don't think you can count Data Bank out of it. That is all I'll say to this, but I will respond to your question.
Okay. Thank you very much. If you're tuning in, we're having our business review for 2020. I've been having discussions relating to the Cedi, relating also to stimulus packages, of course, the whole COVID-19 and its impact on the economy. And we're currently have had a discussion on the Agyapa Royalties deal. We have just 15 minutes to go. If we could get our original correspondents coming in to react on what is happening in their regions, it will be really good as we quickly go on to have a discussion on the continental free trade. Today, there was a meeting to actually set the ball rolling. The President, Nana Akufo-Addo, spoke about how Ghana was poised to make sure that things go the right way. President of South Africa, Ramaphosa, was also speaking about the fact that there has to be a special dispensation for women, and also the fact that 40 billion has been set aside under the Afri-Exim for head of states to draw on to make sure that this doesn't just become a talk, but it becomes a reality. Ding dong, who wants to take it?
So
after,
I think,
because it's all part of the revenue issue. Because
right.
once we can send stuff out of the country in terms of exports, it helps the economy.
I mean, we can't talk about after much than we have done on this platform, and it's a great initiative. We've said that. So in terms of Africa, looking at it from the African perspective, it is one of the critical transformative projects that can turn Africa around from a growing economy to probably a first-class economy, because it is at the heart of our GDP and our budget constructs, where we move from the deficit era into probably even a surplus system. But because I am a Ghanaian, for the purpose of this conversation, I would want to push a little bit more the conversation as to Ghana's preparedness and Ghana's readiness to make sure that, particularly and more so when AFTA is headquartered in Ghana, it is one of the greatest benefits we can ever have, but it is as nothing if we don't leverage on that critical infrastructure. The fact that Ghana is housing it as the headquarters gives us a leverage. South Africa also has the executive secretary coming from their side, so that they also have a leverage. There are other economies that have positioned themselves so well to leverage on AFTA. Ghana is at a point where we are looking at a beyond aid kind of construct. We should not just say it, we should do it. Now, our economy is largely, we say all the time, largely informal. MSMEs. Today, AFTA has kicked off, technically. My question is, if we are very much interested in how AFTA works and how we leverage on, why have we not bridged the gap between the informal sector and how the MSMEs region is able to understand what AFTA is doing and is able to take advantage of the position of AFTA and even apply it to the businesses they are doing so that we can leverage on exports? Is it just going to be left to the boardrooms and the meetings and the high-level conversations, or we are going to dribble it down to the ordinary person? I remember my meeting with Apia Domako was in relation to tourism, how we could actually get some feedback from the tourism sector, because I was working on the Chamber for Tourism and how contributions from various sectors could make this AFTA really work. So when it comes to stakeholder engagements, I'm sure Mr. Apia Domako will say that some stakeholder engagements have gone on. So what else should we be doing as a country? So what we should be doing is what to do for the MSME who is watching and he's heard, probably if he's heard that there's something called AFTA. How does Edako Farms leverage on the AFTA? How does the gentleman who is growing coconut leverage on the AFTA? How does the ordinary man who is employing about 100 people and doing some local stuff, like maybe the MSEMS group of people, businesses, and all those young startups and MSMEs region where, again, the Ghana Enterprise Agency sits, where do that kind of business community appreciate AFTA and leverage on how they can take advantage of it? Is it just hearing it? Is it just knowing what it does? Or it's about being positioned strategically to leverage on? If we don't. Yeah, my producer says we have something on the president's comments during today's event. If it's ready, please play it, and then we'll come back shortly.
Today is a very happy day for Mother Africa. And I'm grateful to Almighty God for the opportunity to be a part of this landmark historic event, the commencement of trading of the African Continental Free Trade Area. In August last year, I handed over a state-of-the-art office building to the African Union Commission to serve as the head office of the Secretariat of the AFCFTA. This constituted a very significant implementation milestone in the operationalization of the AFCFTA, following the AU's extraordinary summit held in the Republic of Niger on 7th July 2019, where Ghana was honored by her peers with the privilege of hosting the Secretariat. For many of us, past and present, who have waited patiently for this day, this ceremony represents an important step towards realizing the goal of continental integration. The manifestation of that enduring dream of the founding fathers of our union to create an economically integrated and sustainable continent capable of ending our dependency on foreign assistance and eradicating poverty by harnessing our considerable resources, human and natural, begins today. We're determined to enter into a new era of industrialization, and access now to a single continental market will be a game changer on that journey, as it will be the key to the ability of businesses on the continent to recover from the adverse effects of COVID-19 and proceed to grow and leverage on the new opportunities available in the new market. Trading amongst ourselves will be duty-free and quota-free, and with a market of some 1.2 billion people and a combined GDP of some 3 trillion United States dollars, the AFCFTA will boost inter-African trade, stimulate investment and innovation, diversify exports, improve food security, foster structural transformation, enhance economic growth, and above all, provide jobs for the youth.
Thank you very much for sticking with us as we review 2020, the business community's contribution to the economy and what the impact and consequences will be for this year. My name is Odile Ntiamwa, and I am in the studio with Mr. Apia Adomako, who is actually on Zoom, and then Courage Boti, who is also on Zoom. Then Dr. Frimpong and Dr. Pepra are here with me in the studio. Dr. Pepra, quick one on after.
Okay, so from my side, what I think that we should focus on now as a country is on standard. There is a debate on quality and standard. Quality have different dimensions. So if producers want to focus on quality, they might also look at the definition of quality from the consumer. But as we stand now, for Ghanaian companies to benefit from this free trade agreement, it must be based on standard. Yeah. So it means that the role of the Ghana Standard Authority and then anyone in connection with coming out with a product, because this focus on goods is very, very critical. It's also the time,
FDA?
Yes, the FDA is the time for industries or companies to focus on ISO certifications, because that will be the added advantage to your product. So if you are someone making shoes in Ghana, you ask yourself, what can I apply to make my product acceptable in other countries in Africa? The question should not be on quality, but then it should be on standard. So there should be a key role that should be played by the Ghana Standard Authority. So this is the time that we have to resource them, because it will be very shameful for a Ghanaian company to send, let's say, a pair of slippers or shoes to another country, and they will start complaining. But then if we say this is our standard, and it meets the standards, we will be okay. Because in China, they don't talk of, in our books, people say, oh, quality. But in China, they talk of standards. That's why they have the grade. Yes.
Okay, so I have Natalia Kwanzaa on Zoom, who's our regional correspondent for the Western region. Natalia, what has been the biggest story from the Western region for 2020?
Yeah, Delia, so we can talk about the impact of COVID-19 on car rental business. Car rental business started upspring in the Western region when oil was found in commercial quantities. So with this COVID-19, most of the oil companies had to shut down. Most of the expatriates had to go back to their countries. So this affected the business. Basically, about 99% of car rental companies in the Western region had to shut down due to this COVID-19 pandemic. Some of them had to lay off their workers, and some of them had revenue as low as 200 cedis a month, something that they were making, let's say, some were around 10,000 in the month. And some of them also tell me that even in a month during the pandemic, they could not even get one person to hire their vehicles. So this was one of the big stories in the Western region for the year 2020. When you also talk about cocoa industry, we know how cocoa helps survive the country, is the backbone of Ghana's economy. In the Western North region, it produced a lot of cocoa for the country, but somewhere along the line, about 90% of these cocoa farms were affected by the swollen shoot virus. So Cocoa Board had to come in to intervene for the region.
Wow. Yeah. So thank you very much, Natalia, for the contribution from the Western region, and a very happy New Year to you. And as you do your work, you've been doing some great stories, inputting into the bigger picture for all of us. If we still have Mr. Agyapa, if you can just make additions to the after discussion, it will be good.
Okay, so today marks the start of trading. It's supposed to have started in last July, but because of the pandemic, AU heads of state decided to have it postponed to today. Like it or not, we are going to have our borders open for goods to come in quota-free, duty-free, at least for 90% of goods from Africa. AFCFTA is largely should be about SMEs. We have done a study assessing Ghanaian private sector readiness for AFCFTA implementation. The report will be launched in 2 weeks' time. From the study, we've realized the minimal awareness level of Ghanaian private sector. We can see from the report that the bigger companies, the multinationals, the large-scale ones are more ready for the AFCFTA because they understand the protocols. But SMEs, most of them don't understand what the agreement means to them. And if we do not take care, we'll end up Ghana becoming Brussels of Africa, where people will be coming here to attend conferences at the Secretariat, and then at the end of the day, we may not be producing anything to export. But our situation is not pathetic. I mean, Ghana is kind of in a comfortable lead in terms of how the last 4 years has seen how government is trying to prop the manufacturing sector so that Ghanaian businesses will be able to produce and export to other countries in the sub-region. But I think we need more in terms of access to information, access to capital, because if you go to bank and you are borrowing at 35%, and somebody from Morocco is borrowing at 5% or 3%,
yeah, that's actually going to be very serious.
And so we need to do something more internally so that we can make Ghanaian businesses more competitive when they export to other markets.
Thank you very much, Mr. Agyapa. We will come for that report when it's ready. Thank you very much, Courage Boti. We just have the Airtel Tigo conversation and also the fund managers being closed, and the fact that SEC received some money for people who had invested. So I will give truly just 30 seconds for quick reactions to just those two stories. The impairment of 25 million for Airtel Tigo, and then the
I think there is a good opportunity for government to tap into the revenues that come from the telecom sector. However, we shouldn't just pick the shares and make it an ownership structure for government. We should put a team together that manages it.
Doctor, 30 seconds.
Okay, so Airtel Tigo transaction, the problem with Airtel Tigo has been with their finance leasing approach. I've studied their financial statements, and that is where their problem is. They have an issue with how they operate in terms of capital.
So government should offload it quickly?
Immediately.
Okay. Courage, and then Agyapa.
This is a stopgap measure, and then probably at the right time when they find the right investors, they might want to offload it. Initially, they've held, I think, about 25% shares in Airtel Tigo, and then so it was part of the condition for giving the permission for the measure. So I think once the right opportunity comes, they would want to offload it.
Mr. Agyapa, quickly, 30 seconds.
I think it's not about capital, it's also about looking at the telecom market. Currently, the market has almost tipped. And so if we don't take a full analysis of the market, what are the structural barriers to entry that other businesses are not making profit? Currently, it's only one provider that is making profit. The rest are actually barely surviving in the market. So we need to do a full-scale analysis of the market ensure that we can create a level playing field so that whoever comes to invest in the market will be able to make some return on his or her investment. Else, whoever comes in will just be an extension of how LTT Group performance has been.
Thank you very much, gentlemen. You have made today's business review suave. You have made us all enjoy business in the simplest form. I had in the studio Courage Boti, obviously on Zoom. And then I also had Kusiapia Domako also on Zoom with CAT International. Courage works as an economist with Data Bank. I had Dr. Frimpong, who is actually with FLF Africa, and then also Dr. Pepra with the Valley View University. My name is Odilia Ntiamwa. Have a blessed 2021. May this year have and bring to you favor and also bring to you opportunities. Leverage on the opportunities that God has given you and let us enjoy the rest of it.